You also need to be mindful of the liquidity requirements, right? Some lenders have liquidity requirements where they need you to have at least 5% of your loan amount left as cash or other liquid assets in your super fund. So let's say you're buying a 600K property at 80% loan to value ratio, with your loan being 480,000. 5% of that is about $24,000 in cash or other liquid assets needs to be left in your super fund. So as you mentioned, 145K plus $24,000, about 170K approximately is what's required to secure a 600K property. And that includes deposits, stamp duty, legals, other buying costs like building and repairs, as well as your 5% liquidity. You do need that extra bit of cash left over, even if the lender doesn't require that, because you will have maintenance costs for the property. You might have vacancy at some point in time. So you need to make sure you're maintaining some buffers in your super fund upon purchase.